What's going on, guys? Welcome back to another video. In today's video we're going to talk about AMC, GME as well as the broader market. So AMC was up for 2.63% for the day. It had a high of $18.82. The average volume on AMC is around 56.83 million, but today's volume was around 37.55 million. So by just looking at the today's volume, it's pretty clear that the volume has gone down significantly. Now investors are a little bit scared. Now you can see for yourself, even on a low volume, today was a green day. It shows you clearly that the market maker decides what they really want to do. So what was happening today, it was that the premium on the puts were heavier as compared to the call side. So the market maker want to sell puts so that they can make a little bit profit out of it. That's why they let the price go up a slight bit. AMC is a genuine company. It's a genuine business. If you are buying the stock, there is nothing to worry about these kind of a price fluctuation that we're going to see in the stock. And the best thing about buying the stocks is you can average down on a position if it has gone down significantly. I know a lot of people were buying AMC in their 40s, which could be quite a lot of heartbreak for a lot of people, those who believed in a short squeeze that's going to happen. I also personally believe there is going to be a short squeeze, but now by the way the manipulation is happening in the AMC, it seems to be like the market maker are in quite a bit of control. It's very hard, even on very huge volumes, to send AMC to the moon. But let's see what's going to happen in the near future. Now let's come over to the GME. GME was up for 0.51% for the day. It had a high of $148.22. The average volume on GME is around 4.77 million, but today's volume was around 2.45 million. So again, in GME as well, the volume has gone down significantly, but still the stock price was up because the same sort of a sentiment is applied towards GME as well. A lot of investors were buying put option, so the market maker want to hedge their put position. That's why they let the price go up a slight bit. Majority of the retail investor, they play the weeklies option. So what the market maker are trying to do, they are trying to rob the retail investors from their weekly option play. Now tomorrow we have the CPI number coming up. There was a big fear in the overall market today. When we look at this, SPY was down for 1.71% for the day. It had a high of $445 for the day. So we can see there was quite a bit of downtrend. Now there were a little bit of buying that was happening at the market close, but still there is no clear-cut indication. The broader market is basically waiting for the CPI number. Whatever the CPI number is going to be, that's what going to decide where the market is going to go. Now, I personally believe the CPI number is going to be a little bit out of control tomorrow, which might send a little bit more fear into the market. But this is what the market makers are waiting for. They want to see the retail is having the fear, they're buying the puts, and then they will try to hedge the position by sending the SPY to the moon. Now let's come over to the options flow for the AMC. Now by looking at the options flow in AMC, yes, majority of the investors are onto the put side. That's why these market makers are letting the price go up a slight bit. As you can see in this 2 days expiration, there were a lot of $25 put option came in. These individuals are paying a lot of money and they're buying a lot of contracts and betting that the AMC is going to go down in next 2 days, and the market makers are trying to hedge that position. We know this thing for sure. If there is kind of a extreme sort of a fear in the market, AMC and GME get affected the most. So a lot of investors are buying a put option. Most likely the market makers are going to hedge this position. Still these puts are in the money, but whatever the price goes up in AMC is going to create some sort of a loss into these put options. Now when I look at the put to call ratio, you can see the put side is slight bit lower than the call side. It's almost 50-50, but the premium is heavier on the put side. Like I just mentioned, the market maker are selling puts and they are collecting premium out of it. That's why the market maker is letting the price go up slight bit. And now when I increase the premium to max and see what exactly the whale is doing. Today there was a whale that came in. He bought a $12 call option with 94 days to expiration. He's paying a premium of $144,000 for it. He's buying 200 contract and he's betting that the AMC is going to go up from here onwards. There is nothing suspicious about this trade, neither any trade that came in today in AMC. Now let's come over to the options flow for the GME. Again, the same thing applies to the GME as well. These put options are coming in with a very short expiration date, and they are all betting that the GME is going to go down from here onwards. As we are having the CPI number coming tomorrow, we know if that number is going to be higher, then there could be a significant downtrend in both AMC as well as GME. These are the kind of days these market makers are waiting for. Now when I increase the premium to max and see exactly what the whales are doing, there was nothing majorly suspicious coming out of the options flow for the GME. Now, when I look at the put to call ratio, put side is definitely heavier than the call side. Like I said, PMR are way too much higher as compared to the call side. That's why the market maker is letting the price go up a slight base, because they are trying to hedge. Now, when I come over to the options flow for this SPY, now by looking at the options flow for this SPY, majority of the investors are on to the downside. The entire options flow was red. Everybody is buying puts on the SPY. Now, when I look at the put to call ratio, you can see for yourself, 86% are on to the put side. They are all betting the SPY is going to go down from here onwards. We just have to wait and see what is going to be the outcome for tomorrow meetings. It could literally send the market in a very extreme sort of a downtrend if the CPI number comes up a slight bit. Now, we have the big banks earning this week as well, which is going to indicate a little bit where the market is going to head from here onwards. We are in a very confused state of market. We don't know what's going to happen. But we have seen similar sort of a situation in the past as well. When the Fed was about to increase the interest rate, there was a lot of fear in the market. But as soon as the Fed increased the 0.25 interest rate, the market started going up, which created a lot of loss for a lot of individuals, because majority of the retail was buying the put option. They were all betting that the SPY is going to go down, but the SPY went up. So the same sort of a scenario could be played over here as well. If the CPI number comes a little bit lower or still in the same range, which can send the SPY to the moon. But I don't think so. After the recent Russia and Ukraine crisis, the inflation is going to go definitely higher, because the energy prices has gone up, the food prices has gone up. Hope so you like my video. Please like and subscribe my channel, and I'm going to see you in the next one. Cheers.